I wanted to hop on and make a very quick little video about some huge money mistakes that I made when I was younger. And they're not your traditional money mistakes. You know, they're not like I wasn't investing, or I took a high interest loan, or anything like that. So a quick little background on me. My name is Kenneth. I'm a self-taught stock trader. I've been trading stocks for myself, by myself, in my pajamas for the last 13 years. But before that, I had jobs in fitness and in the restaurant industry, which I'll get at in a minute. But the first big mistake that I made happened when I was 18 years old. I had about $3,000 to my name from cat sitting, dog walking, helping older people, carry groceries, shovel cars in the winter. I had about $3,000 in my savings account. As I was graduating high school, I started looking around and I started noticing all my friends had Apple products. They had the iPad, the very first iPod. iTunes had just come out. I had received a Apple laptop as a gift and for graduating high school, and I was like, this product is pretty cool. I like it. I knew a little about investing because my grandma was like always talking about like buy and hold investing. And it connected for me. I was like, I have to own stock in Apple. This was 2003, so a very long time ago, before smartphones existed. And I got on the phone with my mom's stockbroker and I said, I have $3,000 I want to buy Apple. I have a full longer video on this topic, but essentially he said, don't waste your money. It was a struggle. I ended up getting way fewer shares than I wanted. If I had purchased the shares that I wanted on my own and I had kept them, and as I said, I was taught from my grandma to be buy and hold, which I likely would have kept those shares, or at least some of them, for some period of time, not to mention the fact that Apple was doing split after split after split. And this was long before I was a stock trader. So this was long before I was looking at a quick $2,000 profit and going, gotta take it. I likely would have kept those shares. And had I kept them, it would be well over $3 million today, just because of the amount of splits that Apple has done. And they split and then they grow, and they split and then they grow, and then Apple added a dividend. Although it is small, it is something. And I'm a big believer in reinvesting those dividends through DRIP back into the stock. So, we're talking about, I'm 37 now, 18 to mid 30s, I would have been worth several million dollars just from that one investment that I was talked out of. So the point of this video isn't to say that, hey, just because you're young and you have an idea that it's great and you have to do it. And the point of the video isn't to say, don't trust people who are older and wiser. This was a stockbroker, an elderly, right? So he didn't really understand the tech, but still, long time. He'd been working in the finance field for a very long time. And even he couldn't see the value, the potential in a company like Apple. He couldn't see that they were going to be a disruptor, that they were making big changes. When I said I wanted Apple stock, he said, no one wants to listen to music on a computer. They want tapes and records. So I had a quote unquote very smart, very successful stockbroker talk me out of buying stock in Apple because he couldn't see what with my very limited knowledge, I had no idea. I didn't know how to look at financials. I didn't know what a disruptor was. I didn't know any of that stuff. All I knew was all of my friends have an iTunes account. A lot of my friends have iPods. I just got an Apple laptop as a gift and it was amazing. I should invest in this. That is to say that, and that's not to say that just because you like a company, it's worth investing in. But the point of this video really is that when you're young, you can take chances. If I had taken a chance and I was wrong with my position in Apple or whatever company you're eyeing today, and you're 18 years old or younger, and you're wrong, you have a lifetime of earnings from whatever job or career you end up in to make up for that mistake. You can't always take big risks when you're older, which leads me to my second story. I was working in the restaurant industry after the whole pro wrestling thing had gone awry and I broke my back and I was back at home. Didn't want to go to college just to go. So I was living at home with my mom, and yes, very fortunate to be able to live at home, not have to pay rent, not have to help out with any of the bills. And because I worked in the restaurant industry, most of my meals were provided at the restaurant, or I would like sneak a taco in the kitchen when no one was looking. And so I had very limited expenses back then. I had very limited expenses. And I think at the time I was still on my mom's healthcare, so I wasn't paying for my own insurance. I walked to my restaurant that I worked at. It was right up the street, so cars weren't a big expense, gas and stuff like that. My biggest two bills, my only two bills really, were gym membership and cell phone bill, and they were tiny. And so every dollar that I made working in the restaurant industry went boom, into savings, into savings, into savings. After a couple years of doing this, making 20, 30,000 a year in the restaurant industry, so not a lot, but it became a lot because my lifestyle was such, as it still is, that I'm a minimalist. I live well below my means, and I wasn't spending a lot, and I didn't have rent hanging over my head or a mortgage hanging over my head or condo fees hanging over my head. I was able to turn 30 grand a year into almost 100,000. And I'm looking at this money. This predates really my interest as an investor or a stock trader. I'm looking at this pile of money in my bank account earning 5%, 3% interest. It wasn't very much back then. It's even less today. And for whatever reason, maybe those income property shows were on or something like that, or maybe I had spoken to someone who said that they had income properties. I had the idea to take that $100,000 and put it in an income property, an income generating a rental property that I could also live in on my own down the road if I no longer wanted to live at home with my mom and I had a job and I had income coming in. I could just move into that unit. There was this must have been around 2007, maybe. There was a studio apartment where the condo fees were about $300 a month. Studio apartments back then were going for around $1,300 a month. So subtract the condo fees, and I was looking at about $1,000 of profit per month once you take out property taxes and stuff like that. And I called my mom and I said, I want to buy this. It's an income property and I can rent it and I can make money from it. And my mom said, I don't know a lot about real estate, but we have this family friend who knows quite a bit. Why don't you call him? So I called him and he came and he looked at this apartment and it was dingy. And he walks around and he goes, it's $90,000 for a studio apartment. It was like 400 square feet, $90,000 back in 2007. And he said, we are at the height of the real estate market. You will never see a studio apartment in DC go for more than what it's currently going at, about $90,000. Not only that, but you're going to have to paint, you're going to have to, fix up the kitchen a little, fix up the bathroom a little to get it ready to rent. Not worth it in my opinion. Again, not knowing much, I had a gut feeling that this guy was wrong. Home prices in DC are always going up. It's DC, right? There's always going to be, because of politics, there's always going to be a fresh group of either college students, interns, politicians, people working for those politicians who are coming to DC. So even if he was right that the prices would not grow, I would still have a pretty guaranteed source of income in a tenant. But he talked me out of it. He said it was a waste of money. Now, many years ago, like 5-6 years ago, that exact studio apartment in the very same building came up for sale. And it was $205,000. So it had gone from $90,000 to $205,000. And the point of this is that home prices always go up, right? Even right. Remember, I said it was 2007. The housing crisis came right after that. So in the short term, maybe he was right about we're not going to see prices get much higher. But long term, man, was he wrong. And that income would have grown too over the many years because rents have increased. And even though I don't imagine that if I was a landlord, I would be a greedy landlord, you would still be increasing rent somewhat over the years. And so these two huge money mistakes literally cost me millions of dollars. And like I said at the beginning, this isn't to say that every idea you have is going to be right. And this isn't to say that every person that you listen to who's older and wiser is going to be wrong. You should always consult people who are older and wiser and say, what do you think about this? But at the end of the day, especially when you're young, sometimes it's best to go with your gut. Other times it's not, but you'll have to, cross that bridge when you get to it to see whether you actually were right or wrong. But like I said, when you're young, you have more time to make up for your mistake. Not only that, but if I were to go and buy a studio apartment now in Washington, D.C., it would be pushing $250,000, $280,000, which you might not have now, but you might have had 15 years ago when the prices were way less. So to wrap all this stuff up, consider taking chances when you're young. Always consult with people, right? Still get their input, still get their ideas. But sometimes, man, especially when you're young, it pays to go with your gut. Now, I'm sure there's going to be people out there who have opposite stories, who say, well, you know, I bought this stock at all-time highs. It dropped 90%. I sold it and I lost everything. But again, that's why it's better to take those chances when you're young. You don't want to be taking huge chances when you're older because you have less time. Things have appreciated in value, right? Studio apartments were 90. Now they're 300,000, 250,000. So take this story not as me saying like, boohoo, I'm so angry that I'm not a multimillionaire, but take it as a sign, if you're young, to consider taking some chances. If you thought this video was helpful, please hit all the buttons. You know what to do. Thanks for watching and have a good day.